Hey traders, checking into the stock market today. Appreciate all of you who tuned in to our live stream this morning. Lots of fun, as always. Before we get into the charts, we've got a compiled link of all the ebooks that we've been putting out over the year. Check them out. There's a lot of them. So the link will be in the description of this video, in the comments of this video. Nice compiled ebook list, free. So SPY, we got the FOMC tomorrow at 2 p.m. Eastern. We had a day today where bulls had brief periods of showing some strength and individual names clearly stood out stronger than others. But overall, if you look at daily charts, the bulls didn't really do much to shift the sentiment of bear control. We had a midday news coming out of Russia as far as, Putin potentially enacting whatever that allows for a draft, something along those lines. By all means, dig deeper because I am not your Russian fundamental expert here. But he's going to be speaking tonight, which could potentially lead to a bit of volatility as well. But really, it's all eyes on the FOMC. And so the question heading into the FOMC is, are bears overweight? Wrong word. Are bears over leveraged? Are they too exposed, essentially? Because the bears have had full control over the last week. And as I've mentioned, we've had bearish reactions to Powell and CPI the last time they've come around. And so everybody's looking bearish towards the FOMC. And so the question is, do we see a little mini short squeeze in response to the FOMC tomorrow? And I don't have the answer, nor do I have confidence in one way or the other. So I will be mostly flat into tomorrow and then trading the reaction. But as of right now, bears still weak on the daily time frames is what it boils down to. And we can see SPY today didn't break the high of yesterday, and it broke to a lower low. So 382.11, 382.18, both of those levels broke. We can call it a bear break with a lack of follow through, which means what? Means we scout a potential falling wedge. So I zoom in, and I haven't done this yet. Is this a potential falling wedge type setup with bear breaks lacking follow through? If I were to draw it, it would look like this. That's a worthwhile support line. That's 6 distinct touches. But really, I don't care about a downtrend resistance line. I just care about this downtrend support line because there's plenty of touches to make it valid, and then the high of today. And you can see it's a bit of a megaphone-like pattern. Bear break with no follow-through, bull break, no follow-through, bear break, no follow-through. So 4-hour megaphone, you could also draw that. But I'm just going with a downtrending support line and a lower high resistance line where if we don't break the high of today, it's just another lower high. So that's my clarity on the S&P 500. QQQ, daily time frame was an inside bar. QQQ was our stronger name today. We rejected from the high of yesterday by 14 cents. So a nice top fish for bears. We got right up to that level, and then we dumped fast and hard. And bears had big, fast gains from that double top rejection. We dropped 1.6%, which on the bear leveraged ETF is 4.8% in just a couple hours. So sideways range still over the last 3 days, not much changing here. NASDAQ stronger than the S&P 500 the last few days, but not by much. Still a potential daily bear flag at this point. Bulls are playing some defense with the lower wicks, but we've yet to see them do much going on offense. Today, as I was talking about on the live stream, it was all Apple on the morning. QQQ was chopping around and unclear, and it was a scenario where you had Amazon really weak and Apple really strong, and Google was really weak, and then Amazon tried to reverse. There was just a lack of clarity, which is what led to this chop sideways. You won't find a much more choppy sideways morning than what we saw in the first hour of trading today for QQQ. And it was a tug of war. The most clear trending days when you want to buy a position and stick with it are when we're seeing all of our major sectors doing the same thing together, or when we're seeing at least one sector and the major components of that one sector doing the same thing. So if Apple and Amazon are both strong and going up at the highs, you have confidence in some bull follow through. But when they're doing the exact opposite thing, it's this tug of war, which leads to this choppy action. So being able to recognize that, again, is just a way to help with pumping the brakes or pumping the gas in terms of looking to be aggressive or not with your day trading. And so this morning, for me, was definitely a sit on your hands and wait. But We traded sideways for over an hour to start the morning, and look at Apple. And this is just what I was imagining with Apple, the analogy where the market was weak and QQQ was weak, and it was literally only Apple picking up the flag here like Mel Gibson in The Patriot as everybody's retreating, and Mel Gibson being the leader of Team Bull trying to rally the troops in the other direction. And you can see Apple, the first hour of trading, as QQQ is going sideways, Apple had a 5-minute uptrend and then just continued strong all morning from there. From the low of the day to the high of the day, that's a 3.2% move in 2.5 hours, which for something as large as Apple with that market cap, very impressive move. So it eventually rallied the QQQ bulls to recovering and seeing some morning upside. But then again, the midday news about Russia completely shifted momentum, and we just had a few bear flags and fresh lows for the bears. I didn't do a whole lot of trading today. I had meetings and distractions, but I will point out one trade where I stopped out at the bottom. And again, I shouldn't have been trading in hindsight. I was using smaller position sizes and tight stop losses, so that aspect was fine, but I wasn't fully focused. And this stop out for FAZ, why am I looking long here on the financial sector? Because we had just broken, I was essentially looking for it to be a climax where we break the low of the previous day, but because when the bear break takes place, the 15-minute RSI is in the teens and the 5-minute RSI is at 20, I was looking for that break of support to mark a temporary bottom, which it did, but I didn't do a good job of establishing enough wiggle room on my long position because I stopped out FAS. I stopped out literally 67.05, and I was the bottom before it rallied for a 3-day maker. I obviously wouldn't have held it for a 3-day maker. I would have scaled out some position, but just an example of, I show winners a lot. That was the stop out at the bottom. Doesn't happen often, but I wasn't playing off of support. So smaller position size, more wiggle room would have turned that stop out, and maybe it was a half-day loser, into at least a day-and-a-half winner. So I'm off track. What are we talking about? QQQ. Hourly downtrend still. So hourly downtrend confirmed. Bounce into the end of the day. Still an hourly lower high. Anything under 291.07. So burden on bulls. Pretty much we have to see bulls have a bullish reaction to the FOMC to negate daily bear flags. Anything else? And daily bear flags are on the table, or they're confirming if it's a bearish reaction to the FOMC. NVDA, potential bear flag. High of yesterday broke by 20 cents. This bounce is not impressive. If daily EMA 12 is resistance, this red line, it's a potential daily bear flag. What made us top out the last couple bounces here? Powell on a Friday, CPI, all these daily bounces are topping out with these fundamental events. If it happens for a third time, a bearish FOMC would mean dropping to lower lows. This is the kind of thing where traders can get in their head too much and say, well, that's the obvious play, a daily lower high, daily downtrend continues, bearish reaction on FOMC, but is that too obvious? Should I be looking in the other direction? Are there too many shorts in positions right now, all anticipating this, and we're going to lead to a mini short squeeze? So just as always, want to not form too much of a bias, but the daily downtrend is the most important factor for me. Tesla bulls keeping their strength, breaking the high of Friday, didn't break 315, which is the level that I need to break to call that a clear break of resistance. Little bit of a rising wedge here. So on the 4-hour time frame, we're seeing these bull breaks that lack follow through, which again to me means caution for a potential rising wedge. Let's take off extended hours to just smooth it out a bit here. Just for pattern drawing, I take off extended hours. Something like that. That's a potential rising wedge. If we can't break 315 and we start daily consolidation, this rising wedge would break bear. But it is still an hourly uptrend at this point. If we lose 305 support, it's a confirmed hourly downtrend into daily consolidation. And we would then be looking at 30, make that 295.65, 295.60 as the most important daily high or low support from there. So Tesla has been a lead bull, absolutely, but Tesla's not going to withstand a bearish reaction to the FOMC. So we can pretty much say if there is a bearish reaction to the FOMC, then Tesla is a 4-hour rising wedge that is likely to break bear. But not to discredit the Tesla bulls, who have been doing a fantastic job over the last 2 weeks of holding extremely strong. And we look at the other EV names, and they're not really doing the same thing. They are stronger than the market. RIVN dumping today and closing at the low. But Tesla is the clear lead bull in the EV space. And compared to the solar space, the solar is acting as a bit of a laggard bear here, where we have been shifting correlation in the last 4 trading days, and we are close to negating the weekly bull flag. So we've seen this now in a number of places. Last week we were talking about where is their relative strength. Uranium, solar, EV. Also talking about how if the broader market weakness persists, relative strength names are laggard bear names. And so CCJ, decent bounce today, but it did roll over into weakness to start the week and to end last week. The solar sector is rolling over into some weakness. EV names are rolling over into some weakness aside from Tesla. So again, just keeping that in mind. Relative strength doesn't mean bulls are going to keep control. They can be laggard bears. And that has been the case for many names from last week into this week. XLV, 123.90 support broke. No, it didn't. Could have sworn that low broke. Financial sector, no, they both held. What level was I looking at? Something 44. Anyways, 123.90 held. So that's notable, but only if we confirm an hourly trend change from here. If we confirm an hourly trend change, then that daily support hold becomes a lot more convincing. Anything under 128.52 will be a daily lower high. So a nice key hold of support. And if you're a broader market bear, QQQ already broke lows, SPY already broke lows, but you really want to see XLF and XLV join. Because just like on a day trading day, when all of our major sectors are at the lows at the same time, bears have more confidence and it's a trending day. Same thing with these sectors. Bears want these names to break their lows of a couple weeks ago to take out that support. So all of our major sectors have then taken out that low to a weekly lower low versus holding support, obviously. So FOMC is going to play a big part here, determining how healthcare and the financial sector hold or break. And XLF is a double bottom. We broke support by a penny, but clearly a support zone here. So bulls are attempting to play defense on XLF and XLV, and they have to do so tomorrow on the FOMC reaction for these double bottoms to maintain. IWM. So broke the low of yesterday. Again, no bear follow through, but bulls aren't proving anything here. Have to get over 180.75 for the bulls to prove anything in the short term. Biotech sector. Double top at the high of yesterday this morning led to a notable turnaround. So rejected from the high of yesterday by 10 cents. And again, the only time I'm going to be trading in the first 20, 30 minutes of the day is a clear top fish or bottom fish. And didn't take this top fish as I already had some bearish exposure here. But a 2% drop in 30 minutes from that double top. And then we triple topped and rolled over again. So top fishing bears in the biotech sector, 2% drops twice today. That's pretty impressive. The bounce was nice, but 2% drops from resistance, which is 6% gains on LABD. But overall, hourly downtrend is our guide. And we don't have an hourly uptrend unless that triple top 82.82 can break. CCJ got an hourly trend change and got the bounce going. Morning weakness was the hourly high or low. We had a big spike in call activity, and that led to a spike across the uranium space. Look at that volume. When you put up that volume, I mean, the first 5-minute candle of the day was 126,000 shares. And when you put up 5 times plus that amount in the middle of the day, it's very unusual. So this was either major ETF buying or major options activity that then triggered automated trading systems to act on. But we got an hourly uptrend now. Anything above 27.56 is an hourly high or low. And on the daily bounce, we are in a daily downtrend. Burden is on bulls to try and shape up the weekly high or low. And still going to be watching for that. If we have a bullish reaction to the FOMC, CCJ will be one of the names that has my attention as a bull. Tesla, definitely a name that bulls are watching. Netflix had a little relative strength today, and it has been. They've been pumping Netflix as far as putting out all the upgrades and all that. 252, failed to break it today, but we're still within striking distance. Again, not many individual names are testing their multi-month highs here like Netflix is. So Apple relative strength today, Netflix, Tesla were the three that stood out the most to me. Out of major names that we're watching every day, the dollar is still strong. The dollar is favoring the bulls here, and the 10-year is certainly still strong. Lori's been covering that. That's up at the high, daily stair-step pattern, higher low, 8 days in a row. The dollar inside bar broke bear straight into a strong close. So that 110.79 level is in play. We would have to see a bearish reaction to FOMC for anything to shift, because if that does not happen, bulls are just fine keeping control of the dollar. Silver, still trying to hold on to a daily trend change attempt, but not doing anything over the last week, just sideways here as the dollar is strong. Oil, unable to confirm a 4-hour trend change. Have to get over 86.18 for a convincing daily high or low to be set off of this support. If we cannot, then bulls aren't going anywhere. Inventory report tomorrow. So bulls just trying to play some defense with limited support in this range. And nat gas, also unable to change the 4. No, I take that back. We did change the 4-hour trend with zero follow through. So that's a choppy mess for me now in the short term. Clearly still struggling at EMA 12 resistance on the 4-hour. And anything under 925 will be a daily lower high as the result of the next bounce from here. So overall, it comes down to the FOMC. I'll probably wait for the reaction. Maybe if there's a trade earlier in the day where I can get myself in a risk-free trade and just let the stop ride through the FOMC reaction, that's one way that I will hold a position into the FOMC if I have a low risk or no risk stop loss in place. But otherwise, I just watch for the initial reaction, and then I watch for 1-minute time frames to try and play an equilibrium or to try and top fish or bottom fish. But what it boils down to is, can XLF and XLV hold their base of support, or do they join Team Bear with follow through? Can the dollar keep holding strong, and are these bear flags or not on SPY and QQQ on the daily time frames? And those are the questions that we have into the FOMC tomorrow. And we'll get those answers. And again, keep in mind, it's not the FOMC reaction that is most important to me. We get that volatility, those 2 hours, but it's the following day when there's time to digest and when there's time for big money to make moves. That's when I look for either confirmation or negation of what the initial 2-hour reaction is going to be tomorrow. Feel free to ask any questions. I appreciate you tuning in. Check out those free ebooks. And we'll see you tomorrow. Do good things.